Good morning, everyone. This is the Holy Macro Show coming to you guys live today. A lot to talk about. I see in the comments, DPS said, "Welcome to the end of Mercury retrograde." Because it's something I talk about, and I was laughing when I saw that because I was thinking about Kashab and I. Kashab actually knew me when I was talking about this during 2020, and it sounded really crazy at that point. And it's kind of like it's not exactly like I look at moon patterns every day, and I'm like this, and I'm standing outside, and I'm like dancing at the moon and stuff, and howling at the moon, and thinking, okay, well, this is going to happen currently right now, and therefore I need to, do this as a trader. It's more that when the technicals are breaking down and there's a period like that, or for example there's a lunacy, there we go, or exactly there's a period of the market possibly bottoming. Venezuela, I'm not really buying the Venezuela bottom in oil because I'm looking at it and going, okay, there's a full moon. I'm also just adding that to the weight of the evidence. It's not because I think like, moon patterns and retrograde periods and so on are like driving the market cycles completely. It's that humans are fucking crazy. And as humans are crazy, the one thing we do know about humans is like, basically there's a bunch of studies on lunar cycles. One is around full moon periods, more babies are born. Around full moon periods, more accidents happen. Around full moon periods, people are crazy. Why? Because our bodies are primarily water. We're kind of driven by these cycles and planes. And so, because of that, you get a lot more volatility in the market around those periods of time. Because guess what? Humans are just, they're very emotional beings. And the market is very emotional. It's not just based in reality of going like, oh my God, reality is like, does anybody think reality drove, silver from 20 to $110 pretty quickly? Yeah, there were some fundamentals there. You could argue about them, and so on, but people buying to those levels, or Bitcoin, for example, even better example, Bitcoin moving from, $1,000 to $20,000 and, from 2016 into 2017. Is that something that is just not driven by anything but people being very rational and normal? No. Same with Beanie Babies. Beanie Babies were, these like dolls that were what they were in the United States around the 90s, 2000, early 2000s. People started buying them, collecting them. Next thing you know, they were going online for $100,000, and people were buying them for $100,000, which is insane. And that's, yep, just talk to anybody who works in the ER. You're right, DPS. So like, if you look at those things and you go, okay, like people are crazy. Beanie Babies are going for $100,000. You got Bitcoin, jumping, 20x in a very short period of time. You have, stocks that have no earnings that go up like crazy. What drives that? Well, it's human emotion. So, I do look at those things and what DPS said, welcome to the end of Mercury in retrograde. It's true. It's today. And that coincides. And most of the time, the March one and the October one coincides with OPEX, so option expiration. My thought today is that the market probably bottoms, probably starts to go up here. Not saying like I think it's going to be perfect, because I think there's a lot of pain ahead in the market, and I think there's a lot of things that can happen. But I think we're more going to go back into an environment where the metals are leading again. Energy continues to do well. We're probably in a strong, cyclical cycle still. And then the technology will lag. Semiconductors will probably lag. All these things will probably lag behind those sectors. So it's still own real assets over fake assets. But at the same time, it's, pay attention to this period, because it's either it bottoms out here or it's not going to. And I feel like a lot of people, Kashop, are panicking with the S&P 500. I didn't even know this because I never look at the S&P 500 this much, and this is kind of funny. I was talking about the S&P, and I was like, and everybody was so bearish, and I was like, yeah, I'm, pretty, the market looks volatile. I'm not and like, not to mention like gold miners are getting hit and all these things are happening. I'm like, yeah, it looks volatile, in technology. And they're like, yeah, it's the end of the bull market, technology's dead, all this stuff. And I go to look at the S&P 500, and I'm like, and I always measure like how much it's down from the highs, and it's down like 5%. And I'm like, is everybody really panicking this much about the market being down 5%? Now, I'm not saying like I want to own big tech. I want to own these things, but I don't think the market is in that bad of condition just yet. And we should have pullbacks. this whole environment where the market goes straight, and Kashop and I have been trading long enough to know the market doesn't do what it's been doing the last few years. It doesn't just go up all the time and everything's just happy go lucky and we're good. It's more of the market is very volatile. The market goes up and down. There's pullbacks, there's consolidation periods. This thing being in just a strong uptrend most of the time is new, and this is insane. And most of the time, these V bottoms that happen that are very quick, those are also very new. That's not something that has always happened as well. So, Kashop, real fast, what are you thinking about? Actually, I did bring a chart. This is funny. 2 weeks in a row of the S&P 500. So let me find that. Did I bring it? I did actually bring an S&P 500 chart. 2 weeks in a row. That'll never happen again, guys, unless I bring it next week. But so, Kashop, what do you think about the broad market? Do you think there's anything here that's like saying like, hey, this thing's going to crack? Because you're also one to really be able to see these things in a big way. So fundamentally, technically, however you're looking at it, what are you thinking about the broad market, the NASDAQ, the S&P 500, technology, cyclicals? What are you looking at here? What do you like? What don't you like?
So looking at the broad market, the theme right now is sell America. That's the global theme. And the reason for that is Trump started it with the tariffs, because with the tariffs, what are you doing? You're hurting trade. But trade and investors recycling their money and putting it into US equities, it's the same thing. So you run a current account deficit and a capital account surplus. So it's two sides of the same coin. So when you hurt trade, then you hurt reinvestment and recycling of dollars back to the US. So Trump started it last year, and now it's getting a little more pronounced because right now what's happening in the GCC, and the GCC are big investors in the US. So if you like, I lived in Dubai. So you go to any person who runs global equities, they run predominantly US equities and call it global. Like, yeah, sure, there are some LSE listed stocks, there are some stocks from Hong Kong and all that, but mostly they just run US equity books. And now everyone is panicking, everyone is selling. And that is just not enough of a bid to handle this volume right now, which is why you're seeing this down leg. Plus, I mean, if you look at it from fundamental factors, AI is a bubble, and it's the same way that .com was a bubble. Yeah, sure, the technology worked out. The undersea cables laid out during the .com bubble are still serving us today, and all of that is true. But when valuation exceeds reality, corrections happen, and that's what we are seeing. So the sell America combined with overall deleveraging, combined with the AI bubble dynamics, and the fact that the S&P 500, yeah, it's a great index. It used to be a great index, and now it is just pretty much 10 stocks, 20 stocks. Now, you make up an index of just 10, 20 stocks, then you get the volatility of a portfolio with just 10, 20 stocks, which is the exact opposite of the intention behind the creation of the S&P 500. When it was created, it was supposed to be a broad representation, and now it is a narrow representation, which means, yeah, sure, you've had great returns in the past, but now it is not the same product anymore. And that's what people are missing. So, for me, I would say there's going to be a lot of deleveraging, and whatever rallies you get, you should sell into it, because I don't think we make a new high in the S&P 500 or the Nasdaq 100 probably for the next 3 or 5 years. Now, I'm not saying we'll never make a new high, because the Fed is just going to keep printing and printing and printing. And in, I think it was 1990s, there was this book called Dow 30,000, and people thought that's a joke. And then Dow 30,000 happened, and the reason for that was the money printing. So I think we'll constantly keep going to all-time highs on everything just due to money printing. But short term, I see a lot of pain for the S&P 500 and the Nasdaq. And if you measure whatever the indexes in terms of gold or in terms of something sounder than the dollar, you're going to find that everything loses value over time because of the constant money printing and what it does to the capital markets. So I would say this is the time to just be in commodities and not worry so much about the S&P or big tech or semiconductors or Taiwan Semiconductor. Now it's all in the news. So forget all those things, focus on commodities, focus on things that are little niche, which are not going to be affected by the broad market correction. It's actually like I keep saying this, and I think I've been saying this for a whole year now. This is a great time to be an active manager. this is a great time to take a risk and say, screw the index. I'm going to not care about it anymore. I'm not going to care about benchmarks. I'm just going to hit it out of the park and hit absolute returns in whichever asset is doing well. So I think if you take that approach, this is going to be a great year. If you're still looking at whatever worked in 2025 or 2024 and thinking that's going to keep working, then no, it's going to be a very tough period for you.
No, I agree. It's just sometimes you got to really start to dig in, and I think that's the thing. Like you figure out how you can position across different asset classes, across different places, different sectors, and so on. And I think it's either you're a great stock picker, or you're an ETF guy or a futures guy. That's my wheelhouse is more like looking at the ETFs, being able to go to different areas, different things. And then also, emerging markets have taken a little bit of a hit lately, like they've been really taking a hit. And so we'll go back to I didn't bring an emerging markets chart. I will get to the thing on wheat and sugar. That's a great comment in there. So like I will get to that in a second. But looking at the US dollar here, the US dollar had a big move. So basically closed the week last week up near this $100 level. I don't know if it was at 100 or above 100. I can't remember, but it was around that $100 level to start this week. And then basically, it started to come down, and, basically the dollar had a down day yesterday. I think a couple days before that, it had a big down day. So once again, it's starting to pull back the other direction. The biggest thing about the dollar is like there's a big resistant zone right here. And this is part of the reason why I keep saying like emerging markets and all these different countries that I am still long currently, they're all sitting on support zones of some sort. Now they're not breaking trend either. So they're not breaking trend. They're sitting on support zones as the dollar's hitting this resistance zone. What do we think is going to happen? Like people have it in their minds that the dollar is just going to rip through this level and never look back. And for some reason, the dollar doesn't respect support zones like, it did all the way over here, the entire time. Not to mention, nothing has to respect a support zone. But if you're looking at currencies, they really play on support and resistance zones more than other assets. So most of the time, you're going to see these levels. And the reason why is people think the dollar is expensive up here. People think the dollar is priced right down here. This is why they kind of respect those zones a lot better. Not to mention you don't have so much news flow around it. There is a lot of trading in the dollar and other currencies, but at the same time, it's just not the same type of hype around it either direction. There's not a ton of Forex traders these days at all. I wish there were more. It is a great place to be. It is a great place to make money. There's a lot of leverage there, but a lot of people don't use it and use it properly. So looking at this one, I'm just saying, the dollar technically looks pretty bad here. The dollar looks like it could hit this level and bounce off of it. And all the trades that everybody's like, oh my God, it's over. The metals, the this, the that, they could pick back up pretty easily. Now the metals are starting to break trend. They're getting closer and closer to breaking trend every day. I'm not saying like, hey, stay long all the metals across the board. There are some things that are not looking good. Silver is getting closer to breaking down once again. It hasn't quite broken down yet. I put out a note yesterday about that. So if you guys want to see those levels, definitely go to my channel on Substack and check it out. But if we're looking at, emerging markets, it's sitting right on that support zone. If we're looking at, what else? COPEX, we're looking at copper juniors, even uranium miners, most of these things are sitting on support zones currently. So if these are all sitting on support zones, we're probably at a point where these can all rip higher and the dollar could rip lower. But the big thing to keep an eye on is the dollar currently. So Kashop, what are you thinking about the dollar currently? Is it something that you're seeing like there's some more upside here, the more downside? Do you think you mentioned the Sell America trade that's been kind of going on since last year? But do you think the dollar's a part of that? Or do you think that this is a scenario where, if we're in this is also a great question for you, and this is probably the big question to answer. If we're in a bear market, this is the thing that keeps getting brought to me. If we're in a bear market, do we think people will panic in dollars, very similar to even 2022, 2008? We saw a little panic in the dollars here and there, different part of the cycle. It was near bottom. But then do we think that that's possible in a bear market, that the dollar is going to just be the safe haven where everybody runs to? Or do we think this looks more like the last few cycles, if we go back even further and going, okay, well, the dollar might get hit with the US stock market.
So the funny thing is that in this cycle, you're seeing the dollar kind of starting to move a bit higher, but treasury yields are continuing to go up. In fact, I think the 2 year yield has gone absolutely bonkers in the last 2 days. So you're seeing US equities correct, you're seeing private credit correct, you're seeing treasury yields spike, and the dollar's kind of holding up. And the reason for that, I think, this is my theory, is that the dollar index is basically the euro and a little bit the Japanese yen and all these other currencies. Now, thanks to the Middle East situation, Europe is in crisis, big energy crisis, and the same issue with Japan. So if you look at all these other countries, their economies are more exposed to what's happening in the Middle East than the US, because US, you have your own natural gas, you have your own coal, you have your own pretty much everything. Like, yeah, sure, you still need to import oil and uranium and whatever, but the impact of the Middle East situation is being felt less in the US than it is in parts of Europe and Asia. And I think that's what is leading to this little strength in the dollar, which is not translating into strength in US equities or US bonds, because I think investors are right now preferring to just hold cash in dollars. And that's something which will last as long as the uncertainty related to the war lasts. Because once that is over, then investors will start to allocate. And at that point, if you ask me whether they will allocate towards dollar based assets, I would say absolutely not. And at that point, we are going to have to see where the money goes to. And I strongly suspect it's going to go to emerging markets, it's going to go into commodities, it's going to go into all the parts of the market that have been ignored for now. And a lot of it is going to go back to rebuilding the energy infrastructure, which has taken a hit. It's going to go into shipping, which has once again taken a hit due to all this. So I think that's where all the money will go. It is not going to go into the Max 7. It is not going to go back into private credit and all these data centers and stuff. It is not going to go into US government debt. So I think this anomaly, which is the rising dollar, is only due to the war. And once this war situation, the uncertainty related to the war situation is down, I'm not saying the war has to end. If the uncertainty comes down a bit, then we are going to see a resolution to this candlestick that you just pointed out. So I think at that point, even if it gets into the resistance zone, it's going to go straight back down. It's just something similar to what we saw with the Treasury futures. They moved both sides of the resistance, and now they are firmly on a downtrend. So I think that's what we are going to see. Yeah,
Yeah, sorry about that. Yeah, I think that we're kind of in a scenario here where I think everybody's going to like the correlation between oil and the dollar. This is a thing that keeps getting brought up so much. You get the correlation between the oil and the dollar, and hey, the US is the biggest producer now, so therefore oil has to always go up with the dollar. And it's like, Jesus Christ. I'm an intermarket guy, and I will even tell people every intermarket trader is fucking crazy. And it's not because we're something is wrong with us. It's the fact that you're looking at so many things. Of course, at certain point, you have to be very objective if you're an intermarket trader, meaning you always take the price action above everything else. And you also know that you might be looking at a correlation that's been great over the years, and that could just dry up completely, and correlations change. And then you also have to look at it historically, like what happened in 2022 that made the dollar and oil go up together. Well, you had the Fed was like, we're not raising rates, was the first thing. So they didn't raise rates in 2021. Right about that time, where you see the dollar bottom out there, as you look at the bottom left side of this chart, the Fed started to raise rates. So as the Fed is raising rates and as the yield curve starts to steepen, we have very tight liquidity. So that also gave a boost to the dollar, which predates the whole Russia-Ukraine war, because everybody thinks that's the reason. And then all of a sudden, when the dollar really gets moving, a lot of things started taking a hit, whether it was stocks, certain commodities, and so on. But really the ones that were going to have a basis in the energy trade in the Russia-Ukraine crisis and so on. That was all based around like palladium went up, for example, nickel went up. Why? Well, those are huge huge products in Russia, huge products in that area. So like that makes sense. You also have the oil situation. That makes sense. So all these things kind of went pretty crazy around the same exact time for a reason. And everybody's looking at it today saying the same thing's about to happen. And the yield curve looks completely different. And the market looks completely different. And people are just hyped on this fact that the dollar has to move with oil. And really, in reality, the healthiest environment for oil will be a weak dollar. If the dollar stayed all the way up there above 108 and just kind of sustained up there, I don't think we'd see oil moving the way it is, because the dollar is where it's at is part of the reason why oil is the way it is. But we did see last week a big panic because of the war situation. And I think people in the United States, they think this is going to be short-lived. They think this is going to be easy. They think we're going to go in there and just take out Iran because, we're America and we have a lot more tanks. In reality, it's a very deep situation that, you got to think Iran has fought colonialism and won many times. They're one of the countries that have stayed away from it all these years. And they basically also believe like this is a war that they will fight to the death. This is different. This is why when you look at war situations, or even like, you're looking at a situation with an argument with someone, like let's say that's a reasonable person and me and Kashop are debating the dollar. And let's say Kashop wants it higher. I think it's lower, or so on. We're going to have a debate about it. We're going to talk about it at the end. We're not going to throw barbs. We're not going to attack each other. We're just going to have a real conversation about it. That's fine. Then if you have a conversation with somebody who is like an asshole, let's say, they will grab just about anything. Think about like, someone like I'm willing to fight somebody face to face. I don't want to fight anymore. I'm 40. I really don't feel like I need to fight people these days, but I will fight somebody face to face if it has to happen. And I'm not going to like, stop, grab your hair and like, pull out a knife and stab you or anything crazy. But at the same time, there are people out there that will absolutely pull out a knife. They will absolutely maybe pull out a gun. They'll maybe throw their, maybe they'll throw their significant other in front of you. Like there's people who are like that. And so you have to think about like the difference in situations. And most of the time, like you're trying to win an unwinnable battle if you're sitting there fighting Iran and you don't think that they're willing to sacrifice a lot. Like, them blowing up ships over there is going to make our oil prices go up a lot. That's something that, we're not really willing to do, is blow up a bunch of ships over there. So they continue to kind of have the upper hand here currently, mainly because the Strait of Hormuz. So that is a big thing that we have to keep paying attention to, that this thing can go on a lot longer than people are thinking. I don't know the exact time frame. There could be some magical thing that ends it sooner, but I don't think it ends soon with the American flag being put in the ground in Iran. I think if it ends soon, it's probably more like we decided we couldn't do this. And so like wondering what you think about the Iran situation. I know we've been on the dollar for a while. We'll hop past it right after this, but wondering what you think about the Iran situation. Do you think this is a situation that everybody keeps asking about it? So I'm not even going to lead you. Just what do you think about it currently? Where do you think we're heading? The Strait of Hormuz and so on. And if you guys have questions, drop them in the chat.
So 1979 there was the revolution and the current regime came to power and they became the Islamic Republic of Iran. And right after that, they had a fight with Iraq. And Iraq and whoever backed them, all of them thought that this is going to be short lived because they just had a revolution, they are weak, and we can absolutely destroy them. And then it was a totally brutal war. I mean, on both sides, they had their children in the front so that, if you have to get to the troops, you have to get through the kids. So, it was a pretty bloody, barbaric, horrific war. And it lasted 8 years. So completely blew everyone's mind. Like now, when you think about it, a war lasting 8 years sounds crazy because here we are in this era of social media where 20 days of war feels like a lifetime. And that war lasted 8 years. Now, what will Iran do in this situation? now that their leaders have been taken out, their successors are getting taken out. Well, I think, like you pointed out, I think it's going to be a fight to the death. And they have never been colonized, and it's a country of 90 million people in mountainous territory. Now, US tried to kind of take over, invade Afghanistan, take over, and what did they end up achieving? After 20 years, they replaced the Taliban with the Taliban after blowing God knows how many trillions of dollars. And that was a much smaller region, much poorer country. All they had was the advantage of mountains. Now, Iran has determination, they have God, and they have mountains, and they have weapons. Now, with that, what are they willing to do? Well, they have already shown that they can adopt a scorched earth policy towards the entire Middle East. So they have already shown what they are capable of doing. And today is Eid. So today is the holiest of the month of Ramadan, where they engage in fasting and reflection. So after today, they are done with that and business as usual. So what happens once they come out with full force, without the physical weakness that comes from fasting, without holding back because of religious reasons, because in that month they are not supposed to commit anything haram. So once they come out of that phase, what kind of power will they show? Well, no one knows, because Iran is a country that hasn't been triggered this much in decades. So
Yeah.
even when the US assassinated the head of their elite Quds force, I think it was over Iraq, they just assassinated him. They showed incredible restraint. And this time they are like, no, this has gone too far, and they are just adopting a scorched earth policy. So I don't see this ending at all, because on the one hand, Trump has dug in his heels. He's like, give me 200 billion more, let's go blow shit up in the Middle East. And Iran is like, same thing, you know, you blow shit up, we blow shit up. You hit our desalination plant, we hit your desalination plant. And you hit our oil and gas infrastructure, we hit the GCC's oil and gas infrastructure. Now, what does this do to relations between Iran and UAE, Iran and pretty much all the other countries? Well, at this point, the answer is they do not care. They do not care about the long term, because all they are trying to do is survive the short term. Now, if you're, there's a saying, right? Like, if you're fighting in a phone booth, then drunken boxing beats martial arts. And it's kind of a similar situation here. Like, when your back is to the wall, you just keep fighting and fighting, no matter the cost, because, well, what else have you got to lose? Nothing else. So I think that's the situation Iran is in right now, and I see this getting worse and worse. And it's personally also sad for me, because my home is in Dubai, and I have not been able to go back for the last few months. In fact, like, I mean, I came out for other reasons, and then I haven't been able to go back, and now I'm kind of a digital nomad. So I don't know what I'm going to do next, where I'm going to go next, because I'm in Asia, and here we have fuel shortages everywhere. So if you go to Thailand, they just give you like 5 liters of petrol, and then they
Let's talk
say,
about that a little bit more, because people
yeah,
in the United States have no fucking idea about that. So people I talked to in Australia, New Zealand, South Africa, South America even are dealing with some fuel shortages. So let's talk about that a little bit more. Like, what are you seeing where you're at? Like, what have you seen like from India, Sri Lanka, and so on? Like, what are you seeing?
so in India, we do all our cooking with gas, and the earlier the rule was you can get one gas cylinder every 25 days, which is sufficient. And now they have changed it to 45 days, which means cylinder gets over in 25, you conserve, you go to electric, you use your old wooden stove outside of your house, whatever you do, but that's the reality. Commercial supplies are stopped. In Sri Lanka, they hiked the fuel prices, did not work. Then they gave everyone a QR code and said every week you get 15 liters of petrol. And it's just like the power cuts have started. It's probably like just 1 or 2 hours a day right now. I think it'll probably get worse over time. And it's summer, so the power cuts pinch a lot more, because it's so hot that the place where I'm at, the temperature is around 30, 31 degrees Celsius. I don't know how you translate that, but the
Mhm.
humidity is 68%. So I just go out of my air conditioned room and I start sweating bullets. So it's that bad, and it's going to get worse, because the summer's approaching. So I don't know what's going to happen. Like, Thailand, desperate situation. So I think Taiwan, they have 11 days worth of fuel, and then China's given them an ultimatum saying, you become one of our special administrative regions and we'll take care of you, or else you're on your own. And pretty much without oil, your economy comes to a standstill. So I don't know what's going to happen there, but every day that this drags on, it's going to be more and more dire for the people who can't afford their everyday life, the people who live on daily or weekly wages. Like, I mean, fortunately, you and I, we are privileged in that we have enough savings to last years, but the people who live paycheck to paycheck just can't afford the next higher electricity bill, just can't afford to pay for petrol, just can't. It's going to get to a point where they can't afford groceries because how do you grow stuff without fertilizer? Well, your yields plummet and then supply dries up. So you're going to have all sorts of terrible situations going on throughout the developing world. And it is scary. It is just so scary that I don't even know what to do except throw up my hands and say, I'm happy to be alive. I'm happy to just be spending every day doing what I love because I don't know what tomorrow will bring.
Yeah, I agree. So you got a question here. When does the war start to increase demand destruction? Kashap is describing a reduced consumption of NGLs with rationing. So it's a
Well,
deep question. So but if you have anything to say on that, feel free to jump in.
yeah, I mean, so supply destruction is happening alongside demand destruction. So it has already started. Uh, I don't see it ending. So it's like it's a race to the bottom on both fronts. So let's just take mining as one example. You need sulfuric acid for mining, you need diesel for mining. So now, what happens when you run out of both? Well, your haul truck stop, your processing stops, and your ore just gets either stockpiled or you stop your operations altogether. Then what happens to the price of the processed metal? I don't know, goes up if the smelters are still running, goes up if end users are still buying. But if they have also kind of said, thrown their hands up and said, there's nothing we can do, then there's no one left to buy. Then it's a case of, I have this inventory, I need to get rid of this for cash because I have debts to repay. So it's all about what the traders will do with the inventory. And at one point, we saw this with COVID. So at one point, inventory goes for a steep discount because businesses get shut. And after that, when the demand starts to come back from bottoming out, there is no supply, and then you have huge inflation. So I think we're going to see a lot of scary volatility. It's going to be like a V. I don't know where the bottom is, but I don't think we are there yet. But once it bottoms, I think we are going to have much, much higher peaks. So the trade isn't to just go shorting copper, shorting silver, thinking that, we are going to enter this period where demand is going to fall off. And the trade is going to be to watch where it bottoms out and then buy it for the next rocket ship up because there really is going to be no inventory once the deleveraging is done. And the demand cannot get destroyed forever because people still need to live. So it's going to get crazy. I think it's going to be worse than COVID at this point.
Yeah, no, I agree because that's the thing that I think a lot of people just aren't understanding. The supply disruption situation isn't like, let's say the war is over tomorrow. The supply disruption situation doesn't end tomorrow. It's the same thing with COVID, okay, restart the economy. It's not a magic thing. Like, it's not like turning back on a computer where it's like, okay, the computer's on, everything's the same as it was. We have the cloud now. Like, even if the computer completely breaks, I can basically go get another Mac. Yes, I'm a Mac guy for you guys who don't know. I can go get another Mac from the store, bring it back, and it's going to look almost identical to this computer. That's not how shipping works. That's not how supply chains work. The supply chains will be disrupted. There will be a lot of issues that we will have to continually figure out. And everybody's just putting this all on oil, which is kind of funny to me. It's like oil is not the only thing that goes around on ships. There's a lot of things that go around on ships. And speaking of which, it was brought up. Let me find that. There it is. If you get a chance, what do you think about sugar and wheat? Too early for sugar. We had a bunch of charts to get through, so sorry guys, but at the same time, there's some good questions. If you guys want to see the charts and me to go through them, just drop it in the chat. Feel free. I will try to go through them, but I feel like there's some good questions, so I want to get to you guys as much as I can. So what do you guys think of sugar and wheat? For me, sugar just kind of came to. So let me pull up my own charts because I just was charting it today. I'm glad you brought that up. So let me see how far it is from a buy signal because it's not far. Sugar is starting to look good. Cotton gave a buy signal very recently. Something I'm going to write about soon. So cotton is starting to just kind of perk up just now. It's been dead money for a long time, nothing to do there. So that's also getting a buy signal and like for a long-term model, very close to a full buy signal. I think it's like inches away from a 52-week high on the December contract. And then if we look at wheat, we've been long wheat for a while. So wheat ZW for you guys playing at home. And so this thing has just been in a strong uptrend. It's chopping around currently, but if you're looking at the broad market and you're looking at exposure to be in and things that you're like, oh, well, I don't really trade wheat, so I'm not going to trade it. It's more the fact of over time cycles happen. Sometimes you're going to want to be, like as a trader, headlong in technology and making a ton of money in big tech, speculative tech, whatever it is. You're probably going to make more money in speculative tech. And then there's going to be times where you're going to be like, oh, I really need to be in communication stocks. Usually when technology is doing, communications doing, because communications are basically technology. Same with discretionary, basically technology. But then there's other times where the market is going to shift more. And you're going to say, I really want to be in some commodities. I really like, OIH, oil services sector. This looks really good. Looks like it just got a new buy after the retest. So you guys could get into that trade as well. Or like last year, you start seeing the gold miners start to go crazy, or the copper miners start to make a move, and so on. So, you just want to be able to shift around. And then wheat is another one that's like, this thing looks really good. It's in a strong uptrend. If we zoom out on it, you're also seeing that it's going to hit a massive new high. Let me look at the level here. If it starts close, and it already got above that, but it's below it currently. If it gets a close above this week above 605, we're really looking at this thing to just continue to take a big upside move. The next target, if you guys are target traders, not my thing, but some people are, 705 would be the next target after that. And then really there's no real crazy resistance till we get to those around those old highs around 1,000. So this thing could take off and not look back. Sugar at the same time, it doesn't look as good. Sugar has gotten killed. Let me look. Sugar. Sorry, they make on the charting software, half the time the sugar futures have really silly names. Okay, found it. And so if we look at sugar, the major level that we want to see a close this week above is exactly where it's at currently, which is we want to get it above 1535. So if it's above, and it's 0.1535 for those playing at home, above 0.1535, this thing could absolutely take to the upside and probably not look back. It's hard when you look at things like everybody sees a bottom and they're like, I want to buy this shit immediately. It looks like it's moving up and it's never going to stop. And then once it's up here, they're like, I don't want to buy it. Zoom out on the chart if you ever feel that way. Sugar has been in a massive downtrend basically since 2023. So it just basically moved down since 2023. Now it's kind of bottoming out, looks kind of like it could bottom out. Also really moves with energy most of the time. So I could see this one taking off and starting to move with energy. So keep an eye on it. Look for a weekly close at this level or above it. And I think it's a buy right now. So that's something that you guys could be looking at as well. So wheat, sugar, get ready for these things because I think these will probably join the party pretty soon. All right, Kashab, let's get into some charts so we can get through a couple things here, and then we'll hop. So I wanted to bring up these macro charts. Talked about the dollar, but mainly the only thing I want to talk to you about is bonds versus commodities. And today I see that TLT is down. I'm smiling too much for this, but TLT is down 1.3%. I've just been like, and me, and I know you've been on the same side as this, where it's like every single person, every time there's a green day in bonds, are like, see, stupid guys being short bonds. Bonds are going to do great. They're going to lead this cycle. Like we're in a disinflation, deflation. I keep getting those words thrown at me, and I'm like, where the fuck is the deflation? Where the fuck is the disinflation? I don't see it anywhere. Maybe I'm fucking blind. I don't know. But at the end of the day, it's like I'm not seeing any of these things. And I continue to see the intermarket tell me it's heading more to the downside. I continue to see the actual fundamentals are telling me that there is inflation. I can see just with my eyes and my brain that oil is up a lot, gasoline is up a lot. These are going to be huge inputs at some point into the CPI reports, which are then going to go into the bond prices. So at some point, like it's just like bonds are just going to get killed. And I was just talking about it yesterday on the Gold Rush show, which was, you know, what we're going to see if bonds are really going to do the breakdown is that we're going to start to see days that are like around like down 1 or 2%. Now, people think that that's not a big move. In the bond market, that is a large move. Like today, down 1 point, I think it was 1.37 when I looked earlier. Down that much, that's a big move for a bond. And what I want to see if it actually breaks down out of this level is that move continue, like another day of a 2% down day or something. I think that would tell us that the momentum has changed. People are selling these things heavily, and that we're in a period of time where bonds are going to continue to get killed. So, what are you thinking about bonds? Even compared to gold, like people don't know that gold and bonds can move up together. People don't know that gold can go up and bonds can go down. They think these things are all perfectly connected all the time, and they're not. So what do you think about the bond market? You could talk about the Fed, central banks, what's going on. What do you think about
So
the bond market?
I would say avoid everything, including the 2 year. So if you must buy bonds, buy the 3 month T-bills, buy really good investment grade corporate credit, the bonds of a company that you really know or have done the due diligence. If you are new to the space and someone's pitching you a private credit product with 11% yield backed by Apollo and Blackstone, steer clear. If someone's pitching you TLT or anything, in fact, in the bond complex, steer clear because this is not the environment for it. And in fact, this is absolutely the worst time to be holding all these things. So you have these big investment banks now saying they're going to develop vehicles to short private credit. Now they are doing that because they know that there's going to be huge demand for that because these products are a zero. They saw it on the way up, they're going to make money on the way down. So when you are in this situation, you should just avoid that space altogether. Now the question is, I need income. What do I do? Well, you buy dividend yielding stocks, or you just start taking a chunk of your principal as a distribution instead of looking for income, because there are some environments where you can make good income buying dividend stocks and bonds and calling it a day. And there are some environments where doing that is latter situation. So if you need income, sorry, you're out of luck, but bonds are not your friend.
No, I agree. I think that's a great way to end it. Bonds are not your friend. That could be the title of this show. But all right, guys, thank you guys so much for joining us. I have to cut out a little early today. I have another thing at 11. So we'll see you guys next week on the Holy Macro Show. I might hit up Kevin and see if we're going to do a video because we haven't done a video in the last few weeks. So maybe that's something that you guys can tune in and pay attention to this weekend. But for now, we'll see you guys soon. And next week on Friday for the Holy Macro Show, be there. We've got a lot to talk about. Still a lot more to cover and a lot more charts we didn't get to today. But we'll keep getting to them. And we'll see you guys soon.
Thanks, everyone.